Hey, so much coming Space and Equity. We're all about increasing assets and creating new space. Game day today. I got my Niners hat on. So go Niners and go Ravens today is where I'm at. But I wanted to talk to you about the top 10 banks, who they serve, and why is that important to you? Who's your banker very much matters. So j.p.morgan Chase has about 3.9 trillion in assets. Bank of America, 3.16 trillion in assets. Citigroup, 2.3 trillion in assets. Wells Fargo, 1.9 trillion. Goldman Sachs, 1.6 trillion. Morgan Stanley, 1.2. Bank, 675 billion. PNC, 557 billion. Truist, 555 billion. TD Bank, 516 billion. What do I mean by that? So if you're JP Morgan Chase, you're the largest banking institution in the US, 4 trillion in assets. You serve Fortune 500 companies. You help companies with their IPOs. You are involved in international trade, do credit cards, car loans. But if you're a business owner and you have a business with $5 million in revenue, if you're okay with your banker being artificial intelligence, then that's a business plan put together. Do you want to study an industry so you can purchase an existing business to add to your portfolio to vertically integrate the business you already have? Or are you a corporate entrepreneur who wants additional streams of income that doesn't require all of your time and efforts, but the capital resources that you've gained? Well, we can help you do that. How do we do that? Well, with 20 years of banking experience, we can help on the financing side through the traditional bank, the non-traditional capital resources, and through equity. Reach out to us at 214-251-4786, 214-251-4786 for a consultation, or you can reach out at contactobi.com or our website, spaceequitycorp.com. We believe when you have the right team, you come correct and they can't stop you. Let us help you get there. Yes. Can they service your account and give you great technology? Absolutely. Can they provide commercial card loans? They can do all of that. However, their energy is not going to be towards a $5 million annual revenue company. They will service that company via technology, meaning if the artificial intelligence can spit out a reading, an estimate, a grade on that business, that's fine. So yes, can I qualify you for a credit card based on your score, your Dun & Brad, your credit score? Absolutely. But if you need a nuanced transaction that a banker is involved in, that means I have to take beyond what artificial intelligence can surmise and make a decision for your company. You need a real banker. And it's not that they're just not designed to serve you. They're designed to serve when nuance comes into play. It's that Fortune 500 company that they're working on. It's that company going to their initial public offering. They're bringing nuance to that. But to the service business, to the manufacturer that's in that $5 million space, I'm going to serve you with AI. Same would be for Bank of America, Citigroup. And when I go through, Chase does a lot of things, but primarily they're a traditional bank that provides loans to their customers, and they take your deposits, they provide loans in order to proliferate that local economy, that national economy, and international as well. Bank of America, Citigroup, Wells, same thing. Goldman Sachs is different. Goldman Sachs manages assets, meaning, so if you have assets that are traded on the market, publicly traded, and you have a portfolio, typically, let's say your net worth is like $20 million and you have some assets with Goldman Sachs. A $20 million net worth for Goldman Sachs is probably pretty small. But I bring that up is they're different than a j.p.morgan Chase or a Bank of America that also plays in that. Their focus is they don't provide loans for the most part. They probably have a Goldman Sachs credit card at this point, but they're not a lender of trade. They're an asset under management institution. So Goldman's probably wouldn't be the bank for a retail client or a client, what we call a Main Street client that has entrepreneur that has business. You go there after you've made a lot of money. Now you want somebody to manage your money. Same with Morgan Stanley. US Bank is the same. PNC, you're back into the traditional commercial bank, and they provide. PNC is a little unique in that they're the seventh largest bank, but they truly know how to underwrite in what we call the commercial and industry space. So a lot of smaller banks, community banks, regional banks are very much real estate driven. That means, so when a client comes to us, we take data from previous experience to make determinations on what's next in that. So oftentimes, if I take on a client and I've seen a client like them before, I use that precedent to help me understand how to take care of this particular client. So in a lot of places, Like in Texas, we love real estate. A lot of our regional banks, a lot of our community banks are very much real estate driven. And then we don't necessarily know how to underwrite as well to what we call commercial and industry. We're very much hard asset balance sheet underwriting lenders. PNC takes that beyond. So if you're a commercial industry, let's say you have widgets you sell to Walmart, widgets you sell to Target and other outfits like that, and Amazon is a big vendor of yours. Well, if selling those widgets is your business, PNC would know how to underwrite to the widget. So what they call it dual underwriting. Say, okay, I know how to move that widget. And if the company fails moving that widget, we would know how to take that over and give it to another vendor and see how well it performs versus just underwriting simply to the balance sheet in a hard asset like real estate. It is challenging for smaller banks to underwrite to widgets, if that makes any sense. They can underwrite to real estate. The building's worth $1 million. The debt on it is 400,000. Even if they default, there's margin enough for us to get some of our money back. Boom. The balance sheet says their net to worth is their debt to worth is 1-to-1. So for every dollar of debt, they have a dollar of assets or cash. That's balance sheet lending. That's, I would say, less complicated, but maybe less complicated. PNC is a large bank that knows how to underwrite to like, no, I can figure out what this business can do based on how fast they move those widgets, and they can underwrite to that. Truist Bank, I actually used to work for Truist. Truist is the 9th largest bank. It's a combination of BB&T and SunTrust, and that's how they got to that $555 billion in assets. They're still figuring out who they are, but they are a middle market bank. So meaning their target customer is a customer that does about $100 million in sales. So when you go to 100 million to about $1 billion, that's considered the middle market. This is before a company typically is publicly traded. They're doing a lot. They have a CFO. They got a whole, like, if you're a middle market banker, may do about 3 or 4 transactions a year. The sales cycle is 3 to 4 years. They are dealing with a chief financial officer, so somebody who went to school to manage the balance sheet of a business. You have the CEO, the chief executive officer, you have the chief financial officer. Typically, a middle market banker is doing a lot of engagement with the CFO, and the CFO has got all his or her analytics in place, and they're saying, all right, if you're going to bank us, we have this expectation. Here's a package, put it together, blah, blah, blah. That's not what happens in typically the community bank. The community bank, the CEO is typically the everything to the bank. Even from about, it's interesting, companies in about $1 million to, let's say 20, 25 million, there's not that much differentiation. You got one person, like I've seen I'm looking at a company right now that does 15 million a year, and I'm looking at a company that does 1.3 million a year. The only difference is 15 and 1. It's the CEO kind of does everything. As you scale, that changes. So typically about at 20 to 25 million, that's when you get to the point where you're like, all right, I need more sophistication. I need to hire staff to do X, Y, Z. I need a bookkeeper. At 1 to 20 million, the CEO is like, he is the bookkeeper, she is the bookkeeper, and they're just saying they have an accountant because there's too much of not having an accountant. But they're just pushing all this information to the accountant and say, figure it out. And they go back and forth. It's a frustrating process because you have so much on your plate. A lot of times your community bank, that's their sweet spot, is helping because they're the advisor. At the middle market space, the clients that a bank like Truist would go after, there's sophistication enough where you're still an advisor because you're a banker. You have more information than the company owner or the company CFO has about how to leverage the market. But you're less of an advisor because now they have some intellectual capital tools they can utilize. That the banker for that 1 million to 20 million, you are their number one financial. You and their CPA, and sometimes there's conflict between the two. You and the CPA are the advisor. I bring this up is that you got to know who your bank serves. If you're at Citi, if you're at Wells Fargo, if you're at Chase, the benefit is technology. The benefit is locations. Man, pretty much wherever you are in the country, you can find your bank. You don't have to pay ATM fees because you can find your bank. You want a credit card and you got good credit, you know you're going to get approved. Boom. It's a no-brainer. You get the best tools. You get your Chase Sapphire, you're good to go. But if you're a $10 million business, they will take your money. They will take your deposits. They will provide you with treasury service. They'll do everything, but they probably won't have the personnel to serve you because their top personnel is serving that business that is 20 billion, 30 billion. Maybe on the low end, they're servicing $100 million company. They're probably not servicing you with anything beyond technology and branch staff that may not be suited or sophisticated enough to support your business. So by knowing your bank, I bring up these top banks for a reason, but what I didn't bring up is those banks that have about $1 billion in assets to 100 million. The lowest bank here has 516 billion in assets. That billion to 100 billion, that's where you need to play. If you're an entrepreneur and you have revenues anywhere from startup 50 million, you probably need to be at a community bank. Start up to 50 million. 50 to 100, you're kind of in that, you're that awkward adolescent stage. You're in middle school, like you may be the fastest and biggest kid, and it makes sense for you to be at Chase, but you may be better served by a larger community bank. Let's say a community bank that does like 20 billion in assets. Because sometimes you can be too big. At that point, you may be too big for your community bank because their loan cap outpaces what you need. But if you're at a community bank, let's say with 10 billion in assets, they probably have at least a 20 million loan cap. What I mean by they will do up to 20 million in loans for one customer. If your revenues is below 50 million, you don't need more than 20 million in loans. Your balance sheet, you'll be too leveraged if you did, for the most part. Now, if you're a trucking company where your assets is what makes you business, and you have a lot of rolling stock, your loans are going to be a little bit higher, but again, you don't need that much. I'm looking at a company that's in that 15 million space, and their loan needs is like 4 or 5 million. So that could easily be handled by a community bank. Know who your banker is. You might be at the wrong bank. Just like if you're running the wrong defense against the 49ers, you're going to have some troubles. You're going to have some troubles. All right. Check out the personnel. You play according to the personnel. We believe that space and equity in increasing assets and creating new space, and that when you come correct, they can't stop you. Check us out, spaceequity.com. Check out the trailer, like and subscribe.